Today, we're going to talk about a massive investment that is completely changing how countries think about the food we all eat. And it really all kicks off with one giant, headline-grabbing number: $1.5 billion. That is the incredible amount of money that Saudi Arabia is putting into a brand new push for global agriculture. Now, this isn't just random spending. This is a huge amount of capital with a very, very specific goal in mind.
So you might be thinking, okay, big number, but what does that have to do with me? Well, this is way more than just a financial story happening somewhere else. It's all about global food security, it's about supply chains, and it's about a new economic reality that could absolutely affect the price and even the availability of the food you see in the supermarket every single day. Let's break it down.
All right, so let's dive into the investment itself, the $1.5 billion bet. This is so much more than just a financial play. You should think of it as a really calculated move to lock down a nation's food supply in what's become a pretty uncertain world. So where is all this cash actually going? Well, it's part of a really powerful three-part strategy. See, they're not just buying up farmland. No, they're investing in the entire journey that food takes, from growing it overseas to the logistics that move it all around the world, and even into the facilities that store it. It's really about controlling the whole system. And the real motivation here, the big goal, it all boils down to one word: stability. By owning the entire process, right from the seed all the way to the ports, a country can basically shield its own people from the wild price swings you see on the global market. It's like building a firewall against the next food crisis. And that whole idea of control leads to this radical new strategy. Just think of it like this: owning the supermarket. The goal isn't to just be another customer in the global marketplace anymore. No, the goal is to own the aisles, the warehouse, and the farms that actually stock the shelves. You know, this really is a fundamental shift in thinking. The old way was, if you needed food security, you just needed to have enough cash to buy what you needed from other countries. The new way? Forget just buying the food. Now it's about owning the assets that produce the food in the first place. So how does this actually work on the ground? Well, it's kind of like a three-step playbook. First, directly buying farms. Second, creating partnerships with local producers. And third, and this one is so important, making huge investments in infrastructure, things like cold storage facilities and giant grain silos that support the whole operation.
And when you put it all together, you get this concept called end-to-end control. It's about locking down your food supply right at the source and then managing every single step of its journey home. It is the ultimate insurance policy against a really volatile world. But of course, a strategy this big doesn't happen in a vacuum. It creates waves. These massive investments, which are spanning continents from Africa to Eastern Europe and Asia, are having a major global ripple effect, especially for the countries where all of this is actually taking place.
So you gotta ask yourself, what's in it for the host countries? I mean, why would they welcome this kind of massive foreign investment? Well, the answer is that these deals are actually designed to be a win-win situation.
For these nations, the benefits are pretty huge. First, they get a big injection of long-term capital. They also get something called guaranteed offtake agreements, which is basically a promise to buy everything a farmer produces at a set price. For the farmer, that takes a ton of risk off the table. And on top of all that, they get game-changing infrastructure upgrades. And just think about the lasting impact of those upgrades for a second. New roads, modern silos, better port facilities, these things don't just help the investor. They actually boost the entire local economy, empowering local farmers and businesses for years and years to come.
So let's zoom out for the big picture. This $1.5 billion investment, it's not happening in isolation. It's a huge signal of a much larger global trend, one that's leading experts to start calling food the new gold.
What's driving this? Well, it's basically a perfect storm of global pressures. You've got climate volatility making harvests unpredictable. You've got geopolitical tensions that can shut down trade routes overnight. And, well, we've all seen just how fragile supply chains can suddenly snap. All these pressures are forcing everybody to completely rethink the value of food. There's one line from the source material that just puts it perfectly. Food is no longer just a consumer sector. It is a geopolitical asset class. That's a profound change. Food is transforming from something you just buy into a strategic asset that you control. So, the bottom line is this: productive farmland and the ability to move food around efficiently
are now being looked at as strategic infrastructure, every bit as critical to a nation's security as its power grids or its communication networks. This entire trend is fundamentally reshaping the global system. As land and supply chains become these strategic chess pieces for nations to control, it leaves us with one massive and, frankly, unanswered question for the future. Who exactly is going to be the one to set the world's table?